So as introduced by the MC, so the conversation we want to have, for the next 45 minutes or so is about tax policy. I think for the better part of the day, we have discussed tax policy and trade, and that's a theme for today. So a few years ago, Deloitte Global, sat down and thought there is then need to put some practical aspects in some of these conversations that we are having. And that is to say, we then launched what we call a survey so that then we can interview people who are in this particular space and see what are the practical aspects that we need to consider, as businesses, as policymakers, and also as tax practitioners. We have done this survey for a number of years. So today we are going to basically discuss the survey that was done last year, and it was launched sometime this year. And what Deloitte did is to interview more than 1,100 participants, most of whom are some of us in this particular room, in the tax field, in finance, and other industry leaders. So without further ado, I would request you to assist me welcome my namesake, Fred Kimotho. Not Fred Kimotho, Fred Omondi. I was trying to see whether you are attentive. Fred Omondi, who is the East Africa tax leader, to take us through a preamble for like 15 minutes, and then we can get into the panel conversation. Welcome, Fred.
So Fred is the smaller version of me, or is it the younger version? So he does a lot of heavy lifting for me. So when I see him before me, I know that I'll have a good session because he's actually laid the groundwork, and my job is quite easy. So when we came back from the tea break, I noticed that only Yomi was paying attention when the MC asked for us to applaud. And I thought maybe we should have had the drummers and the dancers in the afternoon so that we get all of us energized. So my challenge for you is to stay active and engaged. If you don't, then I'll ask for executive powers to summon them so that we can all dance together. But knowing that this is the last session, I'll try and make it short and sweet because really I'm not getting into technical stuff today. So it's more about discussing what are the trends that we are seeing from our global tax survey. So it's actually a global survey, it's not just Africa. But because we are having an Africa tax conference, we'll focus on what is relevant for Africa. So, and then our panel will help us to unpack some of the key themes that we are, witnessing. So we do this survey annually, and really we talk to tax leaders across the globe. We also talk to CFOs and other executives who have a view of what is happening in the global tax landscape. And so these are the themes that have been consistently coming up in the last few years. Of course, some of them are gaining more prominence. Others are continuing because of the global tax reforms that we've been witnessing over the last few years. So you'll see that, for most of the, tax leaders, transparency and reporting is one of the key themes. And, 82% felt that that's really something that will have a big impact, in all the organizations that we work for or that we lead. And then the other key themes that came up is digitalization. We also see the issue of sustainability, and this, I guess, is not limited to tax. So ESG has become even more prominent in recent times. And international tax reform, the panelists and some of the speakers that started from the morning session were talking about international tax reform. So probably a lot of it has already been said. And then the future of work, which has been a key theme since the onset of, COVID and the post-COVID world. So I'll delve a little bit into some of the, relevant aspects from an African perspective. So when we look at tax reporting and, transparency, I think the key concern for most organizations and for the players in this room is really around the increasing burden in terms of reporting or the increasing demand for more transparency from a tax reporting perspective. So it's no longer just sufficient to file your return and declare and say that this is what I've got to pay. The authorities and the regulators want to understand a bit more about your business, especially if you are a multinational. They want to see what you are doing across your various subsidiaries, across various countries, and whether you are really, as they say, paying your fair share of tax, which was, as we know, is not an easy goal to achieve or to define. So looking at it from an African context, we know that a lot of countries have adopted what we call the country-by-country reporting framework. So some of them, including Kenya, you have Mauritius, Nigeria, Egypt, just to name but a few, and many are still, in the process of adopting some of these regulations. So this will require that you do a lot more disclosure, especially if you are operating in multiple jurisdictions. But it's an effort from the revenue authority side or from the regulatory side to be able to have, greater insight into your operations and understand where value is generated, where value is created, where you invest your assets, where your people are based, and where your key functions are performed, so that they can assess whether you're really, operating above board from a tax, accountability perspective. But that is not limited to CBCR. We also see, initiative along the common reporting standards, and some of these initiatives are not necessarily tax-driven. Some of them could be, from an AML, perspective. For example, FATCA, which is something that, for example, financial institutions have to grapple with. So there's demand for more reporting across, all the jurisdictions, not just in Africa, but globally. And this is one of the aspects or the themes that we'll be dealing with going forward. So we need to think of how that will affect us and how that is driving change, in our various jurisdictions in which we operate. Digitization, this is again something that is very current, not just in taxation, but in terms of where the world is investing, the way that we are going to operate, or we are already operating, and it's going to get even more important going forward. So, I was just reading last week and, I think the week before, and seeing the investments that are going into AI and the way the stock market is performing because of the investments in, AI. And you can tell that this is going to be the driver of the future. So tax, interestingly, I think follows the developments, in business. So as we invest more in AI, then some of the questions that are coming up is, what is it that we are going to be taxing? Traditionally, of course, we've been focusing on brick and mortar businesses, and then we moved on to now digital businesses. But now in the future, we are talking about AI and robotics. And so if you're a tax policymaker or if you are in business, then you already need to be thinking, 10 years from now, how is the tax landscape going to look in terms of what we are taxing? But, coming closer home in terms of digitalization, we had, some discussion in the morning around how revenue authorities are investing in digitalization. That is a key theme across most of our countries. So we talked about the example of Rwanda, and we've seen how well they've done in terms of, digitalization. But it's not limited to Rwanda. We've seen a lot of e-invoicing initiatives across the continent and indeed globally. So there's a lot of, impact of digitalization in terms of tax administration. And now we talk about tax administration 3.0. So we are going to see more and more of that. So the question for us is really how that is driving compliance, across the businesses that we operate. Is it making it easier? Because it's one thing to adopt, digitalization, but is it making it any easier for, businesses or taxpayers in general? I mean, from where I come, in Kenya, there's a hue and cry around some of the, effects of digitalization. There's something we call a special table. So if you want to know what it is, talk to me during the break, because as a taxpayer, you don't want to find yourself in a special table. And that's one of the impacts of, digitalization, e-invoicing, and some of the initiatives that the revenue authorities are undertaking. And somebody mentioned here in one of the panels that we want things to be at the touch of a button. So is that possible from a tax perspective? I mean, some of our leaders were talking about assessments being issued through AI, collection being enforced through AI or from digital means. Now, we are already seeing some version of that. So, for example, we do have situations where the revenue authority is connecting to taxpayer ERP systems, and they're able to get reports on your transactions on a daily basis and whether they can, collect that tax even on a day plus one basis, as opposed to waiting, say, till the end of the month or when you do your filing and reporting. Then in terms of sustainability, and I guess this is, around the whole ESG, imperative. So some of the things that we are seeing in Africa is really around it's still emerging, but I would call it the, proliferation of carbon taxes or some form of carbon taxes. Some have been successful, some not so successful. I mean, for those of you who have heard about Kenya and the Gen Z, if you don't know, one of the key issues that brought about the Gen Z uprising in Kenya in 2024 was an attempt to introduce something we call a motor vehicle circulation tax. So I don't know whether it's the young guys who drive or it's the old guys, but it's the young guys who took it up and said, we are not very pleased with this kind of taxes. And that's, part of the reason that we had the uprising and the withdrawal of the finance bill. But Ghana, as if they didn't learn from our lesson, have just introduced, some motor vehicle levy in a bid to promote, of course, cleaner, means of transport. A lot of countries have incentives for, EVs, whether it's Ethiopia, whether it's Rwanda, either in the form of incentives for manufacturers or, lower duties in terms of importation or sale of this, greener means of transportation. And we are seeing, more creative ways of really trying to promote sustainability as we attempt to move towards net zero. Never mind, some of our friends across the Atlantic are really opposing the issue or the idea of a climate crisis, that we have to grapple with. So sustainability will continue to be key. I think, this is an area that still has a lot to be done in terms of looking at what are the appropriate forms of, carbon taxes in Africa. The EU obviously came up with the carbon border adjustment mechanism, and, that could have an impact in terms of those who are exporting to the EU. But really, from a revenue generation perspective within Africa, there's still a debate in terms of what is appropriate, who is going to bear that cost, because as much as we say it's the principle of the polluter pays, but somebody mentioned earlier that businesses have a way of passing on some of those costs. So how is that going to play out? Is it going to aid in the transition to clean energy? Is it going to make it more costly for businesses to operate, given where Africa is coming from in terms of the energy transition debate? Now, looking at international tax reform, I won't spend too much time here because Taiwo already focused a lot on this. So what we are seeing is a lot of moves within the African jurisdictions to legislate the Pillar 2 reforms, into their local legislation. So we do have a lot of countries that are adopting the qualified domestic minimum top-up tax, including South Africa, Kenya. We've seen Mauritius, for example, reforming their tax legislation to be able to conform to Pillar 2. And then there's also an attempt to review some of the incentives that don't sit well within the the Pillar 2 reforms. So this is something that is also going to have an impact for those businesses that have traditionally relied on incentives. Maybe you need to build a better business case in terms of what will drive your investments if the incentive landscape is not what you expect it to be, because that's something that will definitely be reviewed in light of Pillar 2 reforms. Then finally, when you talk about future of work, the post-COVID world, so we see a lot of challenges from a tax perspective in terms of how do we treat, the different work models or the different staffing models that have arisen, post-COVID. So a lot of us are used to the remote work arrangements, but we do have, digital nomads, people operating in different countries from where their businesses are traditionally situated. So a lot of countries are looking at it both from a revenue collection perspective, how do we tax, the digital nomads, or even from a perspective of attracting talent or attracting, investment in terms of incentives for digital nomads and remote workers to be able to operate within your jurisdiction. So there's a lot of work that is happening in that space. South Africa, for example, has put in place a visa that we will encourage remote employees to be based within the country. Kenya is looking at a mechanism for being able to register and tax, these kinds of remote workers. Countries like Mauritius have also come up with incentives that allows citizens of other countries to operate within the country as remote workers. So you're looking at different, initiatives around that. For companies, I think the big concern is, how do you define your presence across various jurisdictions if you have employees that are scattered, in various remote locations. So there's a lot of rules that are coming up around, looking at PEs or permanent establishments in a different way. Of course, there are also challenges around, accounting for payroll taxes. And, we also see aspects around, VAT that arises from some of the activities of remote working. But I've also talked about, as we go into, for example, AI, which is going to there's a debate around whether it will replace some of the, employees or whether it will complement. But whichever the case, from a tax policy perspective, the thinking is, how do we then incorporate the taxation of AI or the taxation of robots in terms of what we would have otherwise obtained if we had employees and we are taxing them in terms of their personal income. So as the future of work develops, the tax landscape is going to look very different in terms of how we tax, some of these new phenomena. So in conclusion, what do we need to be thinking about as policymakers and as businesses? Of course, with increased reporting means that you have to look at your systems and how you gather data. I mean, earlier on, I think the speaker from MTN talked about being concerned about the integrity of your data or the quality of your data. So a lot of organizations are investing to be able to, ensure that their data, is of high quality, because if the Revenue Authority is going to access it on a real-time basis, or if you are going to have to report, what is happening in multiple jurisdictions, you then want to make sure that you're reporting, the right things so that you don't end up into, or you don't end up incurring taxes that you'd otherwise not have incurred. For policymakers, Taiwo spent a lot of time here talking about we need to pick what is relevant for Africa. So as much as we are participating in the global tax reform, how do we customize that to address some of the peculiarities in Africa? And some of these could be just as a result of the structure of our economy, whether it's the informal sector, or whether it's the income distribution, so how do we make sure that we make it appropriate for the context of the continent? And some of it could be really around the cost of compliance or how we want to drive investment, which sectors do we want to drive investment, which sectors do we see bigger risks, whether it's natural resources, how do we want to transform our tax policy to be able to address the peculiarities of the particular sectors. So these are just some of the things that we need to be thinking about. But like I said, today is just to provoke the thought, and then our panelists will help us to unpack what they are seeing in their various organizations or positions. So I'll pause here and then welcome my namesake.
Can take the last seat.
Okay, thanks.
Let's clap again for Fred Omondi. Yeah, so to help us, deep dive into that conversation, I'll introduce two of the industry leaders and one of the policy makers. So then we can just look at a few aspects now from a very, very practical aspect. And the report that has been presented by Fred Omondi is actually in public. So you can actually Google it and you can see it even as we go with the conversation, just in case you want to ask any questions as we go ahead. The next person I introduce on the stage is a Deputy Executive Director in Namibia's Ministry of Finance. He oversees the tax policy and economic policy and advisory units. And he tells me that outside work, he's a private pilot. For those of us who are fond of being left by the prince, you can sit next to him. And he has also summited Mount Kilimanjaro. Please assist me in welcoming Oscar Capelleo. Welcome to the stage. So the next panelist, I welcome the director of the Newmont Ghana Gold Limited. There's a company in the mining sector. He's worked for this company for 13 years, and he looks after operations in Africa. He tells me that he used to work with one of the big fours that uses orange color. I don't know which one that is, but welcome on stage, Jerry. So the last person I will welcome on stage is the Vice President and the Group Head of Tax for Oram Agri. As we all know, Oram is in the agri commodity sector. She has previously worked for a number of multinationals. And I'm also told she worked for a farm in yellow color. I don't know which that farm is. But allow me to welcome Jingxi Huang. Very well. So I think we'll dive straight into the conversation. And I'll start with Oscar. Earlier today we had a very engaging conversation from Taiwo in terms of how the tax policy journey has been in Nigeria and West Africa at large. Even as we think about the presentation by Fred Omondi and as we reflect in terms of how we are seeing the tax policy landscape changing across the globe, could you kindly paint a picture of how Namibia has been looking at it, and maybe more general, from a Southern Africa perspective?
Thank you very much for that question. From Southern African perspective, the challenges on the continent are similar. Namibia is a small open economy. We are a 3 million population. The recent census tells us 71% of our population is under the age of 35. Our Gini coefficient, we are comparable to South Africa, a high inequality society. Therefore, the challenge starts there. So when we speak of taxation, it's all about funding opportunities for our youth. Now, the 4 challenges that we really can sum up when you look at from a tax policy perspective, we hear all good ideas, but it comes down to the people. We do not have enough hands to deliver on most of the things that have been highlighted on the slides there, based on the survey. We just don't have the salaries to attract the best of minds at this stage. The other challenge that comes in is the short-term versus the long-term view that we need to have, because we need to fund the current deficits, while at the same time we appreciate the reforms that are needed to set up our economies for the long-term growth. So that continuous trade-off is one of a serious challenge. The other challenge that we've seen from a Southern African perspective is the Bretton Woods institutions. When they come around to do the Article 4 reviews in our countries, that sometimes the advice we get from the outside, it's not the medicine that we need at that point in time to set us up actually for the success we need to see on the continent. And the other one, perhaps, is then also self-inflicted, is just our slow legislative process. That we go through the debate, yes, like in this room today, we identify what needs to be changed, and once we agree that, and it needs to be drafted in law, like earlier it was mentioned, to be put in the not-so-Shakespeare language, there again, we lose time when we needed the medicine for the economy today. So those are the challenges that we experience on our side of the world. Thank you.
Oh, great. Thanks, Oscar. And people, maybe some of the team members here, I'm sure they really engage you as a policymaker, actually, in terms of change of the tax policies. What did you say? And I know you have mentioned the challenges that you see, because I believe there are quite a number of solutions, even in this room. There are people who spoke earlier and they give you a few solutions in terms of how we can shape the tax policy for betterment of the future. Is there a balance? Is there some difficulty in trying to balance the interest from the stakeholders and what the policymakers are looking at? And that is back to you, Oscar. Yes, a follow-up.
The one that stands out for me, the transparency responses, because that's almost what we need to get that social contract trust conversations going back. Because at the point in time, yes, a lot has been pointed to the M&Es, but when we get the reporting and the transparency right, there'll be better visibility as to who's paying his fair share and who is not. So it's again one of those that I see as a plus, that on both sides it will be a win-win. That from a policymaker, there's transparency in terms of who's trying to bypass the rules and who's playing by the rules and build that trust. Because again, sometimes as a policymaker, the average citizen will be looking to you as like, you're so hard on individuals, but soft on corporates. And at least when we sort out the transparency and reporting side of things, we'll create that better social contract with society.
Thank you, Oscar. To you, Jinxie, being in a multinational, you have operated in a number of countries, including Africa. What would you say are the biggest challenges and opportunities for business operating in Africa when it comes to navigating the current and the anticipated tax policy changes?
Can you hear me? Yeah. I think the biggest challenges that multinationals like Olam face is really the uncertainty. So tax policy changes can be triggered through local events or global events. And local events are largely dependent on national agenda and the intent of the policymakers. Global events, like Fred mentioned just now, international tax reforms from BEPS Pillar 2 to public CBCR to carbon taxes that are emerging. And just sharing an example, right, on, for example, BEPS Pillar 2. When we look across the African countries, for example, Ghana. Ghana has not signed up to Pillar 2. It continues to use tax incentives. It continues to simplify its VAT regime to attract investment. But, on the other hand, Nigeria, for example, has actually already made drastic changes to its local tax rules to actually make sure that even its local entities pay minimum tax of 15% so that its tax base will not be eroded. So really, when we look across Africa, the challenge becomes that it is difficult to predict and it is difficult to, how should I put it, to really try to guess what each tax regulator will react and respond to these reforms. And then, and that's just the start. There's the implementation too. With rules changes, the implementation in practice also becomes an issue. But of course, with challenges, there always comes opportunities. We do believe that, by staying connected, engaging with the policymakers, with the tax regulators, getting good insights from our local teams, whether it's our finance colleagues, our business colleagues, as well as advisors like Deloitte. I think we should be able to navigate these changes.
Thank you, Jinxie. I like that part for advisors like Deloitte. That's a good example to use. Now, Jerry, to you, and I know you work for one of the multinationals as well in the mining sector. How would you say that your organization, from a tax strategy direction, how has it shifted in response to the global, pressures highlighted in the survey, as Fred put it earlier? And maybe you could focus more on the transparency and reporting.
Okay, thank you, Fred. So from our end, we embrace transparency initiatives, and I would say that we do that for selfish reasons, if I could put it that way. Firstly, in the industry that we operate in, your social license is as critical as other regulatory permits that you may have. And one way to build that social license and keep it in good standing at any point in time is to build trust with your stakeholders. So with regulators, with the community in which you operate. And so we jump onto the transparency initiatives and leverage it to tell our story. Tell our story and also achieve some strategic objectives that we want to drive. Firstly, there is risk in terms of the narrative out there. If you allow someone to tell your story for you, they'll tell it the way they want to tell it. They do not have the facts that you have. And the question is, who is better positioned to tell your story than you? And so we leverage it, and just to also provide some background, we are a founding member of the EITI initiative, and so we plan our tax strategy around transparency, taking into account what these international standards predict. So for instance, if you go to our website where we have a section on sustainability, we have a plethora of reports there on all our sustainability reports, which is visible to everyone to see. In the case of Ghana, for instance, we have a tax agreement with the government. As part of the EITI rules, we need to put it out there for everyone to see. So if you go on that same website, you see the contract, the full contract, not an extract. The full text of the contract is there for everyone to see. All our operating permits are also there as well. One other critical factor is the beneficial ownership concept. And as part of the EITI rules, you also need to disclose that as well. And so if you go to the same website as we have very detailed narrative or report on our beneficial ownership. And because we are listed, all the stock exchanges that we are on, we listed there. And these are in direct response to the requirements of the EITI. Now, moving away from the EITI is also the GRI standards on tax. And we also leverage on that to tell our story again. For the past 3 years, we've issued global taxes and royalties report, and it covers all our operations across the globe. If you look at that report, the structure of the report is just identical to what the standards on GRI says, looking at the requirement from 1 to 4. It's basically structured around it. Then beyond it, there are other information that from a strategic point we want to add, we add it to that report. So this is the tone that has been set at the corporate level, and all the jurisdictions in which we operate follow it. Now, if you take the report, just if you permit me, I will just give some insight into how we approach it. We have our approach to taxation generally. So if someone takes that report without dealing with us directly, they have an idea how we approach tax planning, they have an idea how we approach compliance, they have an idea how we approach our stakeholders. And all those matters are outlined in the report. And so even if we are not in the room, that document serves that purpose for us. I was in a session one day and someone was giving a report. The report had to do with an aspect of our operations in terms of taxes. And the narrative was just wrong. And I was in there, and I was listening to it, and I was asking myself, what can we do to also tell our story? Do we have to wait for someone to tell our story for us? And so from our perspective, we only see it as a storytelling tool, and we approach it from that angle. Now, the pillar on which we place our transparency initiative is on the pillar of compliance. So we have an absolute compliance culture. And so when we started doing some of the initiatives, some of the concerns we got was, are you not putting too much information out there? Are you not worried that your regulators will come after you? And we are comfortable because we have a very solid compliance background. And again, to Oscar's point, it's a win-win. We are providing information, telling our story, which is a win for us, and we are also making that information publicly available, which is also a win for the public as well. So that's how we approach transparency.
Very well, Jerry. I think the takeaway for me there is in terms of, like the way Jerry has put it, no one else can give our story better than ourselves. I think I've seen some few multinationals out there even publishing their tax policy, just making it public in terms of how they look at some of these things. I think it goes a long way, in terms of stamping the authority and telling your story in terms of how you are looking at some of these things. I'll take a few questions from yourselves, maybe just one or two. But before that, maybe Fred, to you. And I know we have looked like, at 5 baskets. You looked at sustainability, looked at digitalization, future of work, international tax reforms. Which of the 5 themes that we are focused on do you think, will be the most significant one in the African economies, and how should the stakeholders, like some of us, prepare for the same?
Yeah, good one to think about. I think all the 5 are topical, because they are very relevant to the, current situation. But I think digitization is obviously the big one, in different ways, either from the perspective of allowing the, businesses to operate more efficiently. There are new types of taxes that are coming up as a result of digitization. There is ease of compliance, reducing the burden or even the cost of compliance, not just for organizations, but for individual taxpayers. Looking at how to integrate it in the different ways in which we operate. For example, mobile money is a big thing. So there's a question of whether we can, use mobile money transactions to determine what taxes, individuals or businesses should pay. So there's a lot that is happening in the digitization space, but also it allows us to leapfrog some of the challenges, that have been there in the past, So I think digitization will continue to be a big one, and if we continue to invest and come up with the right mechanisms to make use of that, then it can be beneficial to all. Like I said, we don't just need to invest in digitization, but look at how it works for both sides, because sometimes there's a tendency to look at it from the perspective of collection as opposed to other aspects, whether it's convenience, whether it's the cost that taxpayers have to incur to be able to get plugged into the initiatives. But that will continue to be a key trend and an important one for the continent in particular.
Thank you, Fred. I don't know whether we have any question from the room. I think we'll only take that one.
Okay, thank you very much. I'm so much interested in tax policy. So my question goes to the big man from Namibia. I think that in Africa, one thing I've observed from some government, it's the patience for the incubation period. And I'll link that to what Tayo said. And the question that was asked in the morning, where he did indicate that for some segment of the citizenry, they have set a certain system whereby they want to encourage them to register their small businesses. It then gave me that comfort that Nigeria is really trying to incubate and harvest when the time is due. But that is not the case in some African countries, where governments are very keen on revenue mobilization, and once they roll out a policy, they expect to rake in the needed revenue. What is the case of Namibia? That's question one. Two, we all know that tax policy is the panacea for growth, because through revenue mobilization, you're able to provide public goods and services to the citizenry. But broad stakeholder consultation is key. We have made mention of that of Rwanda as a case study. And when I look at it within the context of digitization, I believe that they may have looked at it in a segmented manner, because it's not all of us that are well educated. So within the context of digitization, how has Namibia been able to segment the approach in order for it to drill down to the various segments of citizens, both with special emphasis on the informal sector? If you can shed some light on that for me. Thank you.
Oscar, you can take the mic.
Thank you for those questions. And it started off with the separation of tax policy and tax administration. Because what we've realized, when you have it all in one, tax administration, with all due respect, over-obsessed with revenue of today. With the separation then of policy outside, we are paid to think long-term sustainability of revenue. That already assisted. Now, at the core of what we do really, we've also now become obsessed with economic growth. Going back to Economics 101, saying when the economy is growing, we are creating more opportunities. Naturally, the tax base will grow. So there's, from a policy perspective, that going forward, we went back to the drawing board and we had one of the highest corporate tax rates in Africa. We were stuck at 32. That we're saying, but at 32, we are no longer driving the most revenue. We, in fact, just taxing the last remaining shop. How about coming closer to the African corporate tax rate average? And we started that journey. We are currently at 30, comes January, we'll go down to 28. But then we said but is it fair in a society that's so unequal to tax a startup, a guy who's just starting a business, compared to the orange guys who charge us incredible amounts for data? And we said, no, it's not. So we therefore created a new category for SMEs. They'll be taxed at 20%, again to allow for that formalization. Because if tax was an excuse why they were not necessarily joining the formal economy, now we're trying to remove that barrier by saying, here's 20%, play in that space until your turnover goes past the 10,000 Namibian dollar mark, then you can join the large corporate sector. So that's one way we're trying to think of it. And the question of why 20? Back to the global minimum of 15, again, we bent our fingers with the export processing zones that we had 0. We were gray listed, we had to shut it down. So now in building up the special economic zones, we've put on the table 20% for multinationals from outside. And again, looking at policy, we're saying, does that make sense that you offer multinationals at 20%, but your own local entrepreneurs, you are about to hit with a 30%. So that was really the thought of saying, as to what we are offering our large multinationals, let's also offer it to our entrepreneurs, that at least they can also build up somewhere that they can retain more of their profits themselves in their businesses. So that's how we were looking at supporting the economy and entrepreneurship. And then the other one comes in with fiscal drag, that for too long, we had not adjusted our tax tables, be it from property taxes, tax tables just in general. That again, the challenge that I put to our bosses were saying is to, let's think like engineers. We trust that when we stop at a fuel station and we ask for a gallon of petrol or a liter of petrol, the fuel pump gives you a liter or a gallon. Because that pump is continuously maintained and recalibrated. But we were not doing the same for our fiscal tools. That we're saying, it's so obvious. We need to continuously refresh our fiscal tools that they actually do what they were intended to do. Because also left alone, in the name of stability, they drift off their intended economic purpose. And that's, again, why we went back to the drawing board and said, let's refresh our tax tables that we do not unintentionally actually end up taxing poverty. That people below what the thresholds should have been had it been adjusted annually by CPI, that we ended up pushing into the tax net, and now we sit with social challenges that we need to fund for, but we are the ones who created that pain point. The same with access to housing. We're saying, but if an average house in Namibia's price is 1.1 million, how does it make sense to tax property at the price range of 600? That we're saying, we are part of the fiscal drag problem. We need to adjust those tables. So again, the thought of, let's think like engineers. Let's recalibrate our tools to make sure they give us the right results economically. Thank you.
Okay, let us think like engineers. Yeah, so maybe to you, Jinxie, as you give your closing remarks, I see time is not on our side. And Jerry did speak about, us publishing our story out there. From where you sit, how do large multinationals strike the right balance between, disclosing more information and protecting sensitive commercial data? And I don't know whether this is a challenge that you have actually faced on your day-to-day, as you give your closing remarks as well.
Yeah, I think definitely. This is always a struggle at the corporate level. I would say it is an art, not a science.
Okay.
An art that requires continued mastery. But I think coming back to how do we then manage these challenges, really we have to be very clear. We have to set very clear and robust policies. Yeah. Of what can be shared and what cannot be shared. Just like what Jerry has mentioned, Newmont embraces transparency. Every organization operating in different industries, in different countries, will have to adapt and adopt different stances. But I think the tone at the corporate level, setting the right policies, will help in managing this. Yeah.
Very well, thank you very much. Jerry, if you could advise a policymaker, and I'm not saying Oscar in this case, but you could advise him because he's a policymaker anyway. What is a priority action to future-proof tax policy in Africa that you'd be looking at, especially based on the survey findings?
Yeah, so I'm looking at the survey on the subject of digitalization. 86% predicts or expects that the OECD's tax administration 3.0 should be rolled out. So my take on that is that even putting tax aside for a moment, the role of technology and the role of AI, and some of the earlier conversations we've had today attest to the fact that the future is technology. And so what do we do from a policy point and also from a taxpayer point? From a policy point, what we need to do is to look at every jurisdiction in isolation and deal with where they are on the journey of digitization. Because not all jurisdictions are at the same point now. And so if you look at the OECD's best practices around digitization, all countries should come up with clearly what they intend to do and what their journey looks like. And that would be a starting point for taxpayers to also create an expectation and know how to also plan their affairs. And so, and one other thing that was clear from the survey is that there was consent, in as much as people expect the digitization to be rolled out and implemented, there were also concerns about its implications on costs and also complicating tax compliance to some extent. And so if from a policy angle, we have a clear direction of where we are going in terms of a medium to long term, then taxpayers can also prepare accordingly. Now, the thing with technology is that, and change in general, is that if it becomes too fluid, considering the potential cost of the systems, putting it together, if it becomes too fluid, then it becomes disruptive. So, and that is why it is important that from a policy point, let us know what your outlook is, let's work towards it. For the taxpayers, what I would say is that let us prepare for the future. The future is technology, we need to prepare for it. So what we are doing, for instance, in our space, is to have a tech person who is sitting within the tax function. So it's not an IT resource, it's not a finance resource, but it's a tax resource within the tax group. And that person's role is to look at how to leverage tech to make life easy for us and to comply with some of these developments when they come up.
Very
so
good.
That would be my advice.
Thank you. And I believe that is for both policy makers and the businesses in the room. And before I come to you, Fred, for the final comments, maybe back to you, Oscar, as you give your closing remarks, is how do you think the regional bodies can leverage on the survey findings, support harmonization, capacity building, and innovation in Africa tax policy making? Oscar.
Again, thinking as putting on my African cap on, we need to collaborate more in terms of how do we make it easier to do business in Namibia. I mean, continental is difficult, but at the sub-region level, that we start collaborating more and writing rules that are closer to one another again. Not that we have one set of rules for Namibia, one set of rules for Botswana, another for South Africa, Eswatini, and so on. And that should be our thinking. I disagree here with my colleagues saying as to each country when each country decides we're going to have 54 answers, and that will not work for all. It's not in our best interest. We should rather collaborate more and come back, because capacity differs. So there's no point in Namibia trying to rewrite rules that I can look at my colleagues in South Africa or in Botswana and say as to, you are more advanced in technology, what do you have in your stack? And we collaborate on that form and we copy and paste where, again, yes, context matters, but let's see where we can align some of these rules to make life easier for both sides, from a policy perspective and those who need to comply with the rules that we write.
Thank you, Oscar. Fred, your closing remarks.
Yeah, so I think what I take away from the survey is really tax us to keep up with the needs of society. So as society keeps evolving, the priorities that keep up, that keep changing, then tax us to also match up or live up to that. But it not only needs to address the needs of government in terms of revenue, but also how it will, support society to achieve some of its objectives, whether it's in terms of sustainability, whether it's in terms of addressing some of the, pertinent issues like inequality, for example, or, other imperatives that will keep us going, for the decades that come beyond. So it's a constant challenge, and we need to partner both policymakers, taxpayers, and tax administrators to be able to, navigate the way forward. Thank you.
Thank you very much, and that is it for us. Please clap for the panel. So you'll come back the MC back to the stage.